Hi, good morning, everybody, or afternoon or evening, depending on where you are in the world. Thanks for joining our Basics of International Expansion presentation today. My name is Andrew Lang from Unitera. I've also got Julian Christmas, who's our Chief Revenue Officer, and we'll be explaining a little bit about why companies go abroad and some options that they've got for help and resources and market entry strategies. So just a little bit about Unitera before we get started. We help our clients expand abroad by taking care of these business logistics that they don't necessarily have the time to research or implement. Becomes difficult for teams to kind of get these strategies going, as you'll see kind of later in the presentation. And we aim to take care of that for them so they can really focus on their business plans and growing their business internationally. What we do is payroll, HR, financial reporting, compliance, a lot and more than that. But we, focus on setting up entities, doing HR work and kind of HR one-offs like employment contracts, things like that. We also offer PEO services as part of kind of our total solution. In this webinar, we'll be going over a little bit of why companies expand abroad, some of the drivers there, and then the options that they have for going into these international markets and establishing a presence there. Everyone's going to be on mute for this presentation, but if you have any questions, put them in the chat, and we'll have a Q&A session toward the end. And then if you have any ideas as you go through the presentation on things you'd like to see for upcoming webinars, we've got a series going on that we'll explain at the end, but we're more than happy to take suggestions. So with that, we'll go ahead and jump into it. I wanted to start by talking a little bit about what drives international expansion. Now, I'm sure a lot of people are familiar with these reasons, but there's a few things that maybe folks don't know about that we can kind of go over. So tapping into a global market, I think this is a really big one for a lot of companies. This is, taking advantage of people, demand in other markets, whether that be driven by a specific customer that has a need for the service or product in that market, or a general market entry where data shows that the service or product is really needed in that market. We've had clients who need support in a country because they've got either a complex product or a service that could really benefit from having someone in country and not just on the phone or over video chat or anything. Another reason is access to a global talent pool. Obviously, this is another big one. I'm based out here in the Bay Area, San Francisco Bay Area, where living expenses are pretty ridiculous. It's expensive to hire people. And companies are starting to realize that you can take advantage of highly skilled, less expensive labor in different parts of the world. There's also a need for specialization sometimes. So we've had clients that are in the aerospace industry, for instance, and they'll go into France because France has a lot of training, education around that kind of industry, and U.S. companies are able to take advantage of that. Efficiencies from a global footprint. Governments provide a lot of incentives to bring companies into their region, and we'll go over kind of some of the resources that are available for that later. But they do things like tax credits for certain types of work, like R&D, incentives for bringing business into that country, and then there's also things like some more developing countries might have a better broadband infrastructure than some developed ones, just because everything is newer. It's not built on top of an old infrastructure, but it is rather a new thing that can really help you keep ahead of the global tech curve. Companies also need localization services, and this doesn't just mean translation, but also having a customer service function or a sales function in country that's really familiar with the way business works, local customs. They've got expertise in that product in that country, can really be a big benefit. An instance that we've seen of that is we've had a client that's an education platform that needed both language and regional expertise in the countries that they were going into. And I think we're all seeing now that it's a little easier than ever to have a remote teams be a thing and connect with people over video chat, and leveraging that technology to have kind of bring all these things together is just much easier than people anticipated ever before. So that's something that we're seeing, facilitate this international expansion. So with that, I'll go ahead and pass it to Julian and talk a little bit about the options for hiring employees internationally and establishing your presence in another country. Julian?
So just in terms of, and this is very, very central to the work we do at Unitera, I'm just going to look at the principal ways of engaging with your international workforce. There are three main ways summarized on this slide. It's true to say that there are more than three ways to engage with your international workforce, but in our experience anyway, 99% of them fall into one of these three categories that appear on the slide. And they range from relatively high touch, high cost, high commitment solutions to very quick and easy to implement and relatively inexpensive. And as I'll explain, the right solution really depends on the circumstances. So on the left-hand option being, the creation of a legal entity. This is the sort of all singing, all dancing way to hire people in another country, creating a separate legal entity with, full range of tax registrations and exposures. So not just payroll taxes and social security, there'll also be a registration and a requirement to make filings around VAT or GST, depending on where you are, consumption tax, perhaps in other countries, and of course corporate tax. So the need to file full financial statements and corporate tax returns at the end of the year. So it's a fairly big commitment, and often what we hear from clients is they want to shy away from creating legal entities wherever they can avoid it, which is totally understandable. Good thing about legal entities is that they're fully scalable. You can employ as many people as you want through a legal entity. It can often be a sensible move to try and create a critical mass in one country. Europe is a classic example. Create a full team in one country who can then serve the needs of all the countries in Europe, but without having ones and twos, so individual employees in each of the different countries. It can be an efficient way to go. It's the best way. So I'll talk in a little while about permanent establishment and permanent establishment risk, but it's a risk that all companies face when they hire people in other countries and when they engage in international business and international business activity. A legal entity is the best way to manage permanent establishment risk, but as I say, I'll talk about that shortly. The downside is that it can take a long time to set up, and it's quite a costly commitment. Classic example is Brazil, where it can take anywhere from 4 to 6 months just to get a legal entity off the ground and in a position to hire somebody. That's a big commitment. It's a long timeline. It's very complex, but you have to do it to have an employee on the ground in Brazil. So if you want to employ somebody in Brazil, you have to go through that process. So that's the legal entity setup. As I say, it's the heavyweight end of the solution spectrum. The middle ground is what we would refer to as a payroll only. So it's possible to hire people in a country without actually having a local legal entity. I have to offer this explanation frequently when talking to prospects and clients who've never come across this before. But you can take a company in one country and register it as an employer in another country, so that you don't have to create a legal entity in another country. The big advantage is it's fully compliant from the point of view of employment law, so local employment law, and it also is fully compliant in terms of local taxes and local social security. So it's very compliant specifically from the employment perspective. However, there are some limitations, particularly depending on how many people you've got and what their activities are. And again, that strays into this concept of permanent establishment, and I'll explain that shortly. Good thing about this payroll only solution is that it's light touch, is relatively inexpensive, and it's quite a common way. We implement this a lot for our clients. If you want to employ 1 or 2 or 3 people, in a certain country, then it avoids the need for unnecessary legal entities. On that point, though, of countries, another limitation is actually that it's not available everywhere. So it's freely available in Europe. You can use this solution in almost every European country. You can use it in Canada, but you can't use it in the USA. You can't use it broadly across the whole of Latin America, and for the rest of the world, it's very much on an exception basis. So you can in some, and you can't in others. So it's a bit limited in that respect, but it is a very good solution if you're hiring small headcounts and they're engaging in fairly what I would describe as non-commercial activity. And the third option is PEO, or some people know it as, so that's professional employer organizations, but some know it as employer of record. What this essentially involves is engaging your employees through a third party. So rather than employing them directly and having them engage directly with your company, they actually engage and are employed by a third party. So they represent your country, they represent your company in a different country, but they actually are not contracted from an employment perspective to your company. They're contracted to a third party who acts like a vendor to your company. Good thing about this one is your company doesn't have to create any sort of presence in terms of tax registrations, in terms of a legal entity in that other country. It's a very quick and immediate solution to implement. So if you have somebody who wants to join your company next week, it's pretty difficult to create a legal entity or even a simple payroll registration in time to onboard that employee. But the PEO or the EOR, employer of record solution, will enable that and will enable you to onboard that employee very quickly. With speed comes expense. So the downside is that it costs quite a lot. You're generally talking somewhere between 10 and 25% of the total cost of employment for an individual. So if you want to employ somebody on $100,000, typically PEO fees will uplift that by somewhere between 10 and 25%. So it's not inexpensive, it's not inexpensive. And therefore, from a sort of scalability perspective, it's not really scalable. It's very quick. But in a longer term, it makes sense to seek alternative solutions. Good thing is it is fully compliant from an employment law and tax perspective. It's a bit like the payroll only option in the middle. It's fully compliant from the point of view of employment law, from employment taxes and social security. But as with the middle option, it can create permanent establishment risk to your company. There can be compliance issues around, for example, issuing of stock options and compliance around that. And there's an element of it which is a bit less tangible, which is the cultural element. Trying to allow employees in other countries to enjoy your company culture, but for example, you as an employer are not able to extend the full range of employee benefits to that individual because the PEO provider is limited in what they can offer. That can create cultural barriers between your HQ teams and your disparate foreign employees. So kind of an intangible issue, but it's one that we come across quite frequently, and it's frequently expressed by our clients. So not just our view, but it's something that they feel as well. So those are the three main options. As I say, there are others, but in our experience, 99% of international hires are made through one of these three options. So moving on then, in terms of which solutions you might consider implementing. Again, we're kind of focusing on, from the international expansion perspective, we're focusing on employing people internationally as it applies to your company, and which solutions you might engage with. So what should you consider? And this is what we advise our clients on all the time. Here are the options. You want to employ a team of 5 in a certain country. what are the options, and which one will we solution for you? And it can be a blend of these factors that we've listed. One of them is timeline. How urgent is it that you get somebody onboarded very quickly? All too often our clients come to us and say, hey, we need to employ somebody in Spain, and by the way, we told them they can start next Monday. That's a tricky situation to manage. There are workarounds, and we can sometimes do it, but it's quite difficult to do that in a way that's fully compliant. PEO, or employer of record, that can meet that need. So if it's a very, very urgent situation, PEO is a really good solution. Again, as per the last slide, it's good, but it's not inexpensive, and it does come with its own limitations. And cost. The next point there is cost. Cost and timeline sometimes conflict. For us, we can payroll somebody in the UK for a couple of $100 a month, and that's a very low cost to your business of having that person compliantly employed. The PEO solution may be 10 times that. As a decision maker, you really have to weigh up timeline versus cost versus some of the risks that are listed further down. Tax risk is one. In implementing a certain solution for your international workforce, are you exposing your company to some inadvertent tax risk? And a classic way of doing that is by engaging people as independent contractors, and this is covered by an upcoming slide. But you can, in doing that, it can be a bit of a false economy by engaging employees as independent contractors rather than payrolling them properly. That can create tax risks. It can also, to the next point, create issues around employment law. It's really important, if you're hiring internationally, it's really important to observe and make sure that you take on board the requirements of local employment law. And it's quite straightforward in the US. In all other countries, it's more complex, and it's very different from one country to the next. There are all sorts of our world of international expansion is littered with examples of when contravening employment law can create problems and great cost for you as an employer. We're currently dealing with a client who has terminated an employee while she was on maternity leave, which is a very high risk strategy, and it's costing them, I think, about 70,000 euros as a sort of a settlement for breaching that employment law. Obviously, that's not necessarily relevant to when you're hiring versus termination, but employment law in other countries is so variable, and in a lot of countries it's stacked very heavily in favor of the employees. It's very important to observe it because litigation usually favors the employee rather than the employer. We talked a bit about business culture and how important it is that your solution allows you to extend the key parts of your business culture to your international team. And again, there are some options which facilitate that more than others. Certainly, independent contractor doesn't allow them to enjoy your business culture. PEO can be an issue as well. If you want to maximize the extent to which you can extend your business culture to your employees, it's really best to make sure they are employed directly, that they are your employees. I think those are the key points that I wanted to cover on sort of factors to consider on international expansion, and specifically what to choose for your international hires. Just want to move on now. I've touched on this already, this concept of permanent establishment risk. I have to talk about this all the time, and the people that I talk to on the other side of the desk, whether they be clients or prospects, the extent to which they understand it is very variable. Some totally get it. I have to say most don't. It's a critical thing to consider when you are hiring people in other countries, and it really drives at creating tax exposures for your company that you didn't mean to create. So what is a permanent establishment? A permanent establishment, it essentially exists when business activity in a certain country exceeds some threshold beyond which some sort of tax will apply. That's usually corporate tax, but it could be VAT or something else as well. And this can be intentional or unintentional. So it's quite easy for a company to create a permanent establishment without realizing it, perhaps because they're not aware of the concept, or perhaps because they're not aware of the triggers for permanent establishment. So permanent establishment risk really looks at the risk that the activity that your company is undertaking in another country breaches some sort of tax nexus and exposes your company to a tax which unintentionally, and therefore there's a tax exposure which is very difficult to manage. So in terms of what are the flags for permanent establishment risk? Key one really is this concept of commercial activity. So if you have somebody on the ground in a country who is your employee, and they are engaging in activity which directly generates revenue, so classically we're talking about a salesperson or sales activity, that person creates or breaches the nexus for corporate tax in that country. And so inadvertently, and without a legal entity to manage the risk, there is an exposure to corporate tax in that other country. So commercial activity, and in fact, whether undertaken by an employee or a non-employee, so it can be undertaken by an independent contractor, that can still create a risk for your company. And the way to protect against it when you have this commercial activity going on is to register or incorporate a legal entity which will have a corporate tax registration, and that will give you what you need to manage the risk. Another one is this concept of sort of senior management activity or executive decision making. If you have an executive decision maker, anything from a founder to a senior vice president, or a senior person who is making decisions about how the company is run, well, that activity in itself creates permanent establishment. And there can be an interpretation that person and that activity is contributing to the global revenue of the business. A good example of a client of ours, we have a client that came to us. There were only two people, and they were both founders, and they're in different countries. And founder is as senior as you can get within a business, and in order to make sure that we gave them the protection that they needed, we ended up incorporating legal entities in two countries because they were in two different countries, Sweden and the UK. We actually ended up with two people employed by separate legal entities, and that was specifically to overcome the risk of a permanent establishment challenge from the tax authorities in one or the other. So that senior management activity automatically triggers permanent establishment. The final one is if you have a fixed place of business, and that's a sort of a literal interpretation of permanent establishment. But even if you have an employee in a co-working space, or two employees working in a short-term rental office, that in itself creates permanent establishment. And if you have that arrangement, it's important to consider incorporating a legal entity, because a legal entity is what's going to enable you to manage your own permanent establishment risk and your own tax position. It's a very technical area, it's very theoretical. It's quite difficult to quantify the risk or the extent to which this risk might crystallize in any given situation, but it's a risk nonetheless. And tax authorities in some countries, Sweden particularly, are growing very wise to it, and they now regularly make corporate tax assessments even when there's no local legal entity. So Andrew, I think that's it on permanent establishment. I think I'll hand back to you.
So I wanted to go over some common mistakes and misconceptions when going international. I'm conscious of time here. I want to save some time for Q&A, so I'll run through these. But the first one up here, a legal entity is required to hire employees in another country. This is one that we run across all the time. I know Julian talked about it earlier with the kind of payroll only or non-resident employer registration. This is not necessarily the case. So it really depends country by country and what the circumstances are of the company that's doing the hiring abroad. But you certainly can look at a non-resident employer registration just to register the domestic company, whether that be U.S. or anywhere else. Or you can look at PEO or global EOR, again depending on the circumstances, and that's going to be kind of a through line for all of these. The second one here, hiring contractors avoids hassle and headaches. I know it's an easy way to kind of get started quickly in a market. Just by hiring someone, you can get started in a couple days just by paying them into their bank account. But while it isn't always non-compliant, it really comes down to the work that the contractor's doing. Like with that permanent establishment, if they're doing sales work, that's a kind of establishes that PE risk. If they're doing any kind of work that's generating revenue. If the employer is their sole client, then that's another sign to foreign governments that, maybe this person actually does have an employee-employer relationship with the company. And that can cause exposure. And if there is exposure, the authorities will generally go after the company first before they go after the contractor. So definitely something to look out for. PEO solutions deliver full compliance. Again, like Julian said, it's fully compliant from an HR standpoint. Not necessarily compliant with tax law. Again, depends on the circumstances. It's kind of playing in the gray areas of tax law. Whatever the employee is doing, if they're carrying business cards for their employer instead of the PEO organization, they can get kind of that granular with looking at whether there is a permanent establishment risk. So definitely something to consider. You always want to get in touch with an international advisor like Unitera, or definitely these are questions to ask when you're designing kind of your strategy, international expansion strategy. That last one there, bullets don't necessarily have to be boring bullet points. Try to inject a little fun into these wherever I can, wherever Julian lets me. So getting into kind of the resources that are available to you. I know we deal with the client teams all the time who are kind of crunched when they come up with this. HR teams or finance teams are given the mandate or given the instructions to hire someone abroad, and then there's all this stuff to consider depending on the country you're going into. So this is kind of a in general, who can help you. Establishment service providers like Unitera. We do the fully compliant solutions. That's either registering a full entity, legal entity, like a subsidiary or a branch, or just doing that payroll registration. Again, helpful people to talk to. We're always happy to jump on the phone for half an hour to an hour to kind of understand what your circumstances are, and then point you toward the right solution. Global PEO services, again, can help you establish a presence quickly, but careful for that PE risk. Ask the right questions when you're taking meetings with them. There's all sorts of immigration attorneys and global mobility folks that can help, if you're moving employees between countries, if you're looking at bringing employees into the U.S., we're going to chat with an immigration attorney later about the L visa, kind of maybe in jeopardy now, the status of that one, but it's a way of, employing foreign workers abroad and then bringing them into the U.S. after a year. Partnership providers, there's several companies that, have an established presence in a market, and usually a region like Asia or the EU. And they can help you determine who the best partners are going to be, give you business contacts, sometimes even like an outsourced sales team to kind of help you test the waters. And then foreign governments also, I mentioned that governments try to kind of curry favor with international businesses and bring investment into their country. But there's organizations like DIT for the UK, Austrade for Australia, Invest Bavaria in Germany. And they have people that, this is their job to kind of inform people and educate people about these advantages of establishing in their markets. So they're always good contacts to have too when you're thinking about your international strategy. So we'll open it up to Q&A now. If anyone has any questions, I think there's a couple that were in the chat that we wanted to go over. And Julian, do you want to speak to? I know someone asked, what sort of companies do you usually work with? Do you want to kind of speak to that, where they're at in their life cycle, or what their plan is?
Yeah, sure. Thanks, Andrew. So it's a good question. On the whole, we work. The nature of our work is such that obviously we're working with companies who are engaging in international expansion, typically high growth companies. For us, that means the tech community, principally based out of the US. So 70, I think we say about 70% of our work is with the tech community, the US HQ tech community. We also work with clients who are based, quite a few in the UK, mainland Europe, and a number in Australia. And they are usually, they're either starting or have embarked upon their expansion plan and are hiring overseas and growing their overseas teams, and we provide the full range of support to them. But the things they have in common really are that they're high growth and that they're hiring internationally. That's typically who we work with.
Another one that I kind of wanted to address is what takes so long with setting up a foreign entity. So this is kind of a turnoff to a lot of companies, like Julian mentioned before. It can take a long time to get an entity set up, a lot of hassle. That's kind of what we help with cutting through some of that. We've got a lot of experience in we can work in 90 plus countries now. The legal process for setting up in foreign countries includes a lot of steps, generates a lot of paperwork and applications. Places like India, Brazil, as Julian mentioned, China. There's a whole lot of steps that you have to go through, and you kind of have to follow them sequentially. So that can take a long time to set up. Other things that can kind of delay setup is bank setup. So in a lot of different countries, there's anti-money laundering regulations, which are kind of known as know your customer regulations. And this can cause bank setup to take a long time. So you do need a local bank account in a lot of different countries to either pay employees out of, pay suppliers, receive payments. We do have solutions for that can make that a lot less painful and make it a lot quicker for companies who need that. But those are just a couple of reasons of why things can take so long. And then I think we'll take one more. Julian, if you wouldn't mind addressing, this one came in, when do you think it's good to use PEO? So I know we talked about it a little bit, but do you mind expanding on that? Because I know it's kind of a hot button service right now.
Yeah, sure. Thanks, Andrew. So when is it good to use PEO? So a couple of specific examples come to mind. One of them is certainly if you're looking to hire one or maybe two people in a very complex market, and Brazil again comes up as the example of a complex market. If you want to hire somebody directly in Brazil, you need to, and if it's your first person, you need to incorporate a legal entity. Takes months. We've already talked about that. Very complex. There's a lot of local tax and other compliance requirements that need to be fulfilled. It's for one or two people to go through all of that is not going to be something that you want to engage with. PEO is perfect for hiring, small headcounts in very complex markets. So Brazil, China, Russia, sometimes in the Middle East. So that's when it makes really good sense. Is when hiring directly is just a real headache. And the other one that we've already touched upon, Andrew, is when when a hiring requirement is immediate, and either a candidate presents themselves and they're immediately available, and you want to onboard them immediately, or as is unfortunately often the case, when the finance and HR teams are delivered a bombshell from perhaps a head of sales who says they've engaged somebody in another country, they've told them they can start really soon, So can you guys sort it out? That's a bit of a hot potato. PEO is great for dealing with that because it's pretty immediate, and you can fulfill that immediate requirement to onboard somebody and maybe transition to a lower cost direct employment option further down the track. So I think it's those two, Andrew. Really, it's either very complex markets or when the need is very immediate, and it's a very quick turn on solution.
Yeah, Julian. I'm just conscious of time. I know we're a little bit over our half hour, so I'm going to push forward. If you do have any more questions, my email and phone number at the last slide here that I'll show. But I did want to make everyone aware that we do have another webinar coming up at the end of this month, July 30th. It's going to be same time, 10 a.m. Pacific. And that's going to be kind of a crash course on employment law in Europe. So that's kind of a scary one when people think about employing people in France or Italy or some other countries in Europe. So we kind of wanted to dispel some of the myths around that and provide some education there. So look out for an invite and link for that coming up shortly. Again, thank you for joining. I really appreciate everyone jumping on and hearing us out on kind of the basics of international expansion. We're looking forward to bringing you more content like this in the future. But if you do have any questions, feel free to reach out to me, andrew.lang@uniteraglobal.com. We also have a general inquiries email and phone number there too. But if you have specific questions about your company, about your international expansion plans, please do reach out. We work on the basis of kind of consulting first, so we're always happy to take an hour-long phone call just to discuss, what specific circumstances you got, what your need is, what your timeline's like, and how we can help you meet that. So thanks again, everybody, and we'll look forward to seeing you soon.